The theme of our November macro update is red, blue, and gray. Followers of US and UK politics are used to studying maps covered in red and blue. The use of only two hues in these maps suggests a kind of satisfying binary conclusion. And in this COVID world, many people look forward to a definitive end to something, anything, not least a very long US presidential campaign or the Brexit negotiations. But in both cases, we may have to deal with continued uncertainty. In other words, we're going to have to cope with shades of gray. In prior decks, we've shown how election results have only a modest impact on real estate markets. But there's evidence that extended uncertainty could play a larger role. Let's take each of these events in turn, starting with the US. We had been concerned that the US presidential election would be contested in the courts, but Biden's victory is likely big enough to shut down avenues for a legal challenge. Even so, control of the US Senate hangs in the balance of two runoff elections to be held in early January. In normal times, continued uncertainty would be a non-event for real estate, but this year it will coincide with the twin threats of this COVID-19 resurgence and a stalled economic recovery, adding to tenants' and investors' concerns.
The practical deadline for UK-EU trade negotiations is sometime in November. Get Brexit done was the slogan of Boris Johnson's winning election campaign in 2019 as he sensed the public's desire for clarity. The Brexit saga re-emerged over the summer as negotiations with the EU stalled. We've long argued that the short-term negative impact of a no-deal Brexit would be relatively muted, particularly when compared to the havoc wreaked by COVID-19. However, not all possible no-deal Brexits are created equal. A no-deal where talks break down in an environment of animosity could be more damaging in the long run because it would lead to fewer agreements in future and temporary measures would burn off. Brexit uncertainty has clearly dogged the UK real estate market since the 2016 referendum. We believe this will continue to the end of 2020 or indeed beyond should we see a short-term extension to the status quo or a bare bones deal which will need more work next year. As with the US, this comes at a time when the UK is struggling to get another coronavirus wave under control. There are many possible paths which the UK-EU relationship could take, and we may not see the full repercussions for several years to come. The US and Europe are not alone in facing political transitions during the pandemic. Japanese Prime Minister Shinzo Abe stepped down in August due to health problems. At least his successor was selected quickly and represents policy continuity. But the fizzling of Hong Kong's pro-independence protests amid social distancing regulations is less conclusive. The national security law is not intended to represent an end to the one country, two systems, but that is an outcome that requires appreciation of shades of grey. Uncertainty itself does not need to be negative for real estate. If it manifests in lower bond yields, then recent years have shown us that an income-producing asset class such as real estate could be a net beneficiary. Opportunistic investors may wish to take advantage of weak currencies or cheap leverage. Long-term investors may move to acquire prized assets at a discount. But there is nevertheless cause for caution. The UK and US are failing to get to grips with the pandemic. They are both among the largest, most liquid and transparent real estate markets in the world, top destinations for cross-border investment, and arguably the worst hit by the structural changes ongoing in the retail sector. All this uncertainty is going to take a long time to sort out.